Yes, Bismillahirrahmanirrahim. Hello and Assalamu alaikum, everyone. Welcome to F2 Practice to Pass webinar, which is being organized by ACCA Pakistan for June 2021 exams. And I am your tutor Haris Hanif, and this is my WhatsApp number. Today is day 3 and 19th May 2021. It's day 3 of MA Practice to Pass webinar. Before proceeding and starting for this webinar, I would like to confirm that whether I'm audible and my screen is all clear. Everybody kindly reply me in the question box. Is my voice and screen is all clear to all of you? I'll appreciate that everyone participate in the question box. Okay, Fiona, Trish, that's good. What about other students? My voice and screen is all clear to all of you? Okay, that's good. As I have said earlier that I always appreciate that students participate in the question box during the class, as the session would be more interactive. Okay, so before starting today's agenda, I would like to display you my day-wise plan, which I had discussed with you in the first session, and this was the day-wise plan. And in day one, we had covered budgeting, and yesterday, I mean day two, we had covered project appraisal, and today is day 3, 19th May, and today's agenda is about standard costing and variances. See, standard costing and variances, this is also the very important topic because from this specific section, you can also expect many MCQs along with the MCQs as well as the case-based OTQ. As this is mentioned in the syllabus guide that one MTQ, I mean the case-based OTQ would be covering from this area as well. And yet this section will also help you to pass your exam. And this is my today's slide, 19th May, day 3. And first of all, first of all, I would like to see, I would like that you should see the last slide, and that such kind of the slide, that is the case-based OTQ. Yes, case-based OTQ. See, 1 mark, and something like that. You will be receiving the question for entire 10 marks. Okay, so but this section also includes various MCQs as well, and I will be discussing it today. All right, so I'm now going to start this today's agenda, standard costing and variance analysis. So first of all, what do you mean by the term standard costing? What do you exactly mean by the term standard costing? What standard costing is? What do you mean by the term standard costing? What is standard costing? See, before going to start the topic of standard costing, we should study standard cost. What is standard cost? It is something estimated cost for one unit. Remember, This is the estimated cost for one unit. This is not for the entire units. This is estimated cost for one unit. And in this estimated cost for one unit, for example, if I say that direct material, the direct material, for example, in order to make one unit, we need 3 kilograms at the rate dollar, for example, 1.8 per kg. This is 3 kilogram and this is my rate. So in order to make one unit, that's 3 multiplied by dollar 1.8. That 3 multiplied 1.8 is equal to 5.4. This 5.4 is my cost per unit. This 5.4 is my cost per unit. And this is known as the standard cost. What is the standard cost? The standard cost is basically the cost which is not something actual. This is something which is estimated. This is the estimated cost for one unit, and this is the standard cost. And here you are facing two kinds of things. This is financial, and this is something non-financial. All right. So standard cost includes non-financial as well as financial. Now, what do you mean by the term standard costing? What do you mean by the term standard costing? Standard costing is a process. See what is written ing. It's a process. Standard costing is a process. A process of what? It's a process of setting standards. It's a process of setting standard. Now, see, standard costing is basically the complete process. It's a cycle. What do you mean by the term process and the cycle means? First of all, First of all, we set the standard. First of all, we set the standard. That means we estimate our cost. Secondly, secondly, we are waiting for the actual result. We perform, we perform the task, and we are waiting for the actual result. And in the third step, we calculate variance. Now, what do you mean by the term variance? Variance means standard cost versus actual. Now, when you compare this standard and the actual, the resulting figure will be known as the variance, and variance is maybe either favorable or adverse. I will be covering the entire variances in today's agenda. And the next one, in the fourth step, if your variance is not favorable, you take reasonable actions. You take reasonable actions to improve the performance. Reasonable actions to improve the performance. Now, focus on this thing. Standard costing is basically the complete process. It's a process. So that means variance analysis is a part of the standard costing. Variance is the part of standard costing. I must write this statement that variance is a part of standard costing. Variance is the part of standard costing. Okay, and standard costing, it is a complete process. Standard costing, it is a complete process in which we set the standard, we perform the task, we calculate the variance, and we are in a position to take reasonable actions to improve our the performance. And so variances is the part of standard costing. Now, the broad terminology is the standard costing. Actually, the topic name is the standard costing. Variance is basically the part and parcel of standard costing. All right. So don't forget this standard costing. It is a process. It's a process which includes variance analysis as well. And what do you mean by the term variances? The variances means the standard cost versus actual results. Okay. So don't forget this terminology. Up till now, any of the student have any question? So please reply me in the question box so that I can assure myself to proceed for the next slide. Kindly reply me in the question box. Is there any question? Okay, that's nice. So I'm now going to proceed. I am now going to proceed this and see on the next slide. This is types of standard. There are four types of standard: ideal, attainable, current, and basic. Now, this standard is preferred. Attainable standard is preferred. This standard is preferred. Now, what is ideal standard? Imagine, imagine there is a standard which is based on the perfect operating conditions. Now, what do you mean by the terminology perfect operating conditions? Perfect operating conditions mean when you make the standard, you consider that there will be no waste, there will be no spoilage, no inefficiency, no idle time, no breakdowns. This is something referring as a 100% perfect condition, and it's your daily life observation that whatever we estimate, we cannot meet it completely. Obviously, there would be a difference in our estimation and in the actual results. So ideal standard is something which is based on the perfect operating condition, and it's not practically possible. This is not practically possible, and it will have a motivational impact because reported variance will always be adverse. It will always be adverse. Why? Because if you make the standard which is ideal and not practically possible. For example, if I say that, in one unit can be produced, or one unit should be produced in 2 hours. That means 2 hours. It cannot be even 2.1 hours. So that's not practically possible, sir. You need to consider some element of idle time, because idle time is a practical possibility. Okay, so if you set the standard which is based on ideal scenarios, that would not be practically possible, and it would definitely leave the motivational aspect on the employees, as something which is not practically possible and it is based on the perfect operating conditions. Definitely they would be demotivated, because if the thing is not practically possible, because if the thing is not practically possible, that means it is not possible in any case. All right, so ideal standard is not preferred. Next is the attainable standard. Attainable standard is something which is based on the hope that standard amount of work will be carried out, but point to be noted is that some allowance is made for wastage and inefficiencies. Now, for example, referring to my previous example, if I can say that one unit takes 2 hours, so I should make a margin that, for example, 0.5 hours can be idle time. So 2.5 hours seem to be reasonable. Okay, so the standard which considers some element of wastages in it, this is known as the attainable standard. Okay, and current standard is something which is based on the current conditions, and basic standard is something which is old and unchanged standard. uh Sorry, what is basic standard? This is something old and unchanged standard. So the preferred standard is the attainable standard. Why? Because attainable, as its name implies, that it can be practically possible and it can be attainable. All right, so now we are moving to this was a theoretical discussion of the standards. Now the actual main thing of this today's agenda is about the variances. What is variances? What is basically variance? What is variance? Variance is something. What is variance? Variance is standard versus actual. This is standard versus actual. You need to compare standard and actual. You need to compare standards and actual, and the difference is the variances, and the difference is the variance. Okay, and in our syllabus, In our syllabus, there are five variances: material variance, labor variance, variable overheads, fixed overheads, and the sale variance. We have got five different variances. We have got material variance, we have got labor variance, variable overhead variance, fixed overhead variance, and sale variances. We have got five variances in our syllabus, and every variance will be split into sub portions. Now, let's move for the material variances. See that material variance, total material variance is divided into two categories. Number one is the price variance, and number two is the usage variance. Number one is the price variance, and number two is the usage variance. Okay, let's start with the material variances. Number one is the price variance, and number two is the usage variance in the material. Now, imagine I'm not going to display the question, and this is something the price variance. I am not sure that whether you have already studied the variances through formulas or through the logical question, the logical calculation. But what I believe that solve the variance based on the logical calculations, and I do avoid the formula because formula sometimes may be confusing. For example, if you will change the figure, you replace the figure, it may be positive or negative. That will create the confusion. I am simply going to explain the variances in a very simple language, so that you will be able to at least understand the concept and avoid simply memorizing word to word. So the question is asking about calculate the material price variance. Material price variance. Okay. Yoto Limited made a budget to purchase 400 kilograms. The company made a budget, but in fact, actual purchases made 500 kilograms. In actual, you had purchased 500 kilograms, and estimated cost was $8, estimated cost per kg. Imagine that before going to the market, I was estimating that 1 kilogram would worth 8 per kg, 1 kilogram. And that was not something actual, that was something estimated. That was something what estimated. That 1 kilogram, that 1 kilogram worth $8. And I went to the market. I did purchase 500 kilograms. I did purchase 500 kilograms, and this is my actual kilograms. Imagine that you are standing at the shop and you estimated that 1 kg would be $8. And I asked to the shopkeeper, give me 500 kilograms. Now, what my mind would be saying to me, my mind programming would be that the cost should be, the cost should be for actual kilograms is $4,000. Okay. But when the shopkeeper gave me the bill, the actual cost was 4,200. The actual cost was 4,200. It is something above my estimation. It is something above my estimation. The cost is high and my estimation is low. So that means $200 is my variance. But this $200 is not in favor of me. It is called as adverse. It is what? Adverse. Because the variance would be, because the variances could be either favorable or either adverse. Favorable means which is something in your favor, and adverse which is giving you the loss. Okay, so this variance $200 is my adverse variance because I was estimating that cost should be $4,000 and actual cost was 4,200 and 200 is the adverse variance. Okay, so this is my direct material price variance. Before going for the next variance, please answer in the question box whether this price variance is clear to you people. I'm waiting for your answers. Okay, that's good. That's good, Fiona Trish. That is why I prefer that go for the concepts rather than the formula. It's so simple. Okay, this is low and this is high. So let's now move on to the next question. And the next question is the reverse calculation. This is the reverse calculation. This is price variance and this is the reverse calculation. Now, how to calculate the variances in a reversal manner? See that. First of all, there should be a format in your mind, not the formula. There should be a format in your mind, not the formula. Okay, not the formula, a format. It is written here, cost should be for actual kilograms and actually the cost incurred. And the resulting figure is the variance. Okay, and the resulting figure is the variance. Now see that variance is given 1895 favorable. 1895 favorable, $1895 favorable. Variance, which variance is it? It is direct material price variance. 1895 favorable, okay? $1895 favorable variance is that. Why it is favorable? Favorable means, favorable means my actual cost is low. Definitely, if my cost would be low, I will be calling it as a favorable for me. Why it is favorable? That means actual cost is low. That means this figure would be low and this figure would be high. That if my actual cost is low, that means it is favorable, okay? And what is the actual cost? The actual cost was 30100. It's 30100 and the above figure would be definitely high. So what we need to do, we need to add these two figures in order to reach at this figure. So 30,100 plus 1895. This is 31,995. Now see, it does make sense. I was estimating 31,000 and the cost is 30,000 and the resulting figure is the favorable. Okay. So just go for the concepts. Just go for the concepts. You people can easily solve the question, whether it is reverse or it is a simple question. So 31995, that is the cost that should be for actual kilograms, and actual quantity we need to calculate. And here that is $9 per kg. This is something estimated. And this is now my answer. This will be my answer. That is actual quantity. Now simply do one thing. Do one thing. This figure divided by this figure. That is 31995 divided by 9. So you will be receiving 3,555 kilogram, and that is option A is my answer. Option A is my answer. See, if you can calculate in an ascending order, you can also calculate in a descending order in a reversal calculation. But remember this thing, that why it is favorable, because the actual cost would be low and the estimated cost would be high. And definitely this does make sense. And here we can calculate the reverse variance. Okay. So that is option A. That's very good. Now I'm giving you just 20 seconds window in order to copy or capture the thing, whatever. And after 20 minutes, I will proceed. Okay, so this was the reverse calculation of material price variance. Now, moving to the next, there is a material usage variance. There is a material usage variance. Now, again, I am explaining the usage variance first, and avoiding the formula, I am going towards the concept. We are required to calculate the material usage variance. Okay. I'm now going to read this question. Baba Limited made a budget to produce 2,000 units, and we are not concerned with the budgeted units. That's 2,000 units. Okay. Baba Limited made a budget to produce 2,000 units, but in fact, actual production was 1,800 units. Actual production was 1,800 units. Okay. And the standard use was 3 kilograms per unit. Now, imagine that you are a senior person. Imagine that you are a senior person. Okay. And you gave the standard target to your juniors, and you gave the standard target to your juniors to produce 1,800 units, and you allowed them 3 kilograms per unit. You called to your juniors that, and you raised a question that, junior, how many units did you produce? He answered you 1,800. You said, wow, 1,800 units. So what is your, this is something your actual units. And what is your mindset right now? 3 kilograms. Then you might be thinking that material should be used. That's 3 kilograms, and that's standard use. Now, while talking to the junior, you are calculating the figure in your mind that if I allow 1 unit in 3 kilograms, that 1,800 units would have been produced in 5,400 kilograms. You just hang up the call and you said to your junior that, okay, I'm coming to the office and receiving the reports. And when you saw the report, the actual kilogram use was 5,290. You again shocked, 5,290 kilograms. That means actual used was less. You estimated more, and you are happy now because 5,400 was your estimation. And you are surprised that 5,290 kilograms was less used. That means 110 kilograms were saved. and you are happy now. This is saved. And remember one thing, in standard costing, in standard costing, in standard costing, we value everything at standard cost. We value everything at standard cost value. So that means the standard cost was $5. That means when you will be multiplying, you will be saying that direct material usage variance, because we are happy we saved 110 kilograms, and that means $550 favorable for me. Okay, this is favorable for me. So remember one thing, that material that should be used and material that actual used. Should be used and the actual used. Material should be used for the actual units. Remember this thing, this is something actual units. Okay, so this is the material usage variance. Copy this. I'm waiting 15 to 20 seconds. Okay, now this was the material usage variance, and that is 550 favorable. Now this is the reverse calculation of material usage variance. This is something the reverse calculation of material usage variance, and that is $3,000 adverse. Try solve now, and I want answer from all of you. I want answer from all of you. Uh, and you know my habit from the past two sessions, that I do not say that solve it correctly. I just say solve it and give me your answer, whatever your answer is. See, don't be confused and don't get afraid. Just solve it and give me the answer. If your answer is wrong, appreciate yourself. At least you did try. And I am here. Your tutor is here to solve your problems. Come on, students, you all are champions. Solve it and give me the answer. Okay, that's good that I am receiving the answers. And now time up, and I am going to solve this question for you people. And you should focus and observe my calculations. Okay, this is the difference would be something. The difference would be something in kilograms, and it will be multiplied by $3 per kg, $3, and that the resulting variance will be. This is direct material usage. The variance is 3000 adverse. This is 3000 adverse. Okay. This is 3000 adverse. And why there is an adverse variance? Adverse variance means that actual used was more. Actual use was more because this figure now would be high. That's why there is an adverse variance because actual kilogram is high. And I received this 3000 figure by having a multiplied with $3. And if I need to calculate this figure, I need to divide it by $3. So simply 3000 divided by 3 resulted in 1000 kilograms. And that 1000 kilograms is not something saved. This is adverse. So that means it is wasted. Okay. This is something wasted. 1000 kilograms because it is adverse. And this is 1000. Okay. Now material that should be for actual units. And actual material use was 61,500. Actual material use was 61,500 kilograms. And that figure is high. That figure is high. So that means the above figure would have been definitely low. And take the difference. It would be 60,500. And now it does make sense that 60,500 was my estimated usage. In actual, I did use 61,000 and the resulting figure is 1000 kgs waste. Now, in order to make 1 unit, it requires 5 kilograms. 5 kilograms, that is standard use. And I don't know about the actual number of units. So what I need to do, I simply need to divide it. So 60,500 divided by 5. The resulting figure is 12,100 units. Congratulations, those who have given me the correct answer. That means you are able to understand the concept and you are able to solve the reverse calculation of the variances. That's very good. 12,100. And those who have mistakenly marked option C, see that you might have made the mistake between the high and the low figure. Try to understand it and solve it. I'm giving you 20-second window. That's great. Now, we have successfully covered this material usage variance as well. Now, this is one of the challenging question. This is not something which is difficult. This is something which is a complex and a very good question to practice for. You are required to calculate actual material cost. See what has been given. You are required to calculate the actual material cost. Actual material cost. Actual material cost. Now, actual material cost is calculated from, it is calculated from direct material price variance. Definitely, because this is a cost and we need for the price variance. All right. But we do not have the price variance in this question. It is saying that material total variance is 6350. It's a total variance, total. And material usage variance is 7600. See that total variance, it is the total variance is the total DM, means direct material variance, is price variance plus usage variance. Okay, because the total is being split into two things, price and the usage. We have got total price variance, and remember one thing, um, if the variance is favorable, show it with a positive sign. If it is adverse, show it with the negative sign. So what is the total variance? 6350 favorable, yes. 6350 favorable. And what is the usage variance? That is 7600 adverse, sorry, favorable. 7600 favorable, and that is the price variance. So how I will be calculating the price variance? It is plus over here, go and subtract from there. 6350 minus 7600. So that means my price variance is minus 1250. That is adverse. Direct material price variance is 1250 adverse. Okay, so I'm now going to draft the sketch of the price variance, because we need to find out the actual material cost, and the actual material cost is calculated like cost should be. How do you calculate the cost should be? That is $9.5 per kg multiplied by actual kgs, that is 27,200. That is 27,200 actual kilograms, and that cost should be 9.5 multiplied by 27,200. That means 258,400. That is the cost should be, and this is my answer. The answer is actual cost, which is unknown to me, but I know the variance. And it is 1250 adverse. And if it is adverse, that means definitely, if it is adverse, that means definitely my actual cost, adverse means my actual cost is high. My actual cost is high. Okay, actual cost is high. So what I need to do, simply take the difference, and this is the difference, 1250, and actual cost is high. That means my actual cost is 1250 higher. That means it is 259650. This is my actual cost. Okay, this is my actual cost, 259650. Now this is the answer. 259650. Okay, this is something my actual cost. So I hope you do understand this question, and this is the pure exam standard question. This is a pure exam standard question. You might be receiving such kind of question in your exam, and you will definitely be remembering this webinar. Okay, hurry up, do copy this. Is it clear, all of you? Please do reply me in the question box. I'm asking to all of you, give me a response, all of you. What about other students? Yeah, this is exam standard MCQ. Okay, students, so let's now move on to the next slide. And the next slide is about and we got the labor variance. And in labor variance, we got three variances, that is rate variance, efficiency variance, and the idle time variance. The total labor variance is split into three categories. Number one is the rate, number two is the efficiency, and number three is the idle time. And I must say that this rate variance is just like, we can say this is just like your direct material price variance. This is just like direct material usage variance. And this is something different. This is something different, okay? This is something different. This is just like, and you have to replace the, you have to use hours. You have to use hours instead of the kilograms, okay? But the theme is same. So let's now come on to the question and the rate variance. This is the direct labor rate variance, okay? This is the labor rate variance. And the same question uh, is based on the direct material price variance kind of a calculation. This is a rate variance. Read the question, hurry up, read the question. Read the question, read the question. Okay, the question is saying that calculate the labor rate variance. And how to calculate the labor rate variance? Sim Limited had recorded that actual hours paid for 500. That you had paid for 500 hours to your workers, and that standard rate was $8 per hour. So definitely you would be estimating that 8 per hour. That means it is the estimated cost. And you have actually paid for 500. So your mindset would be that the labor cost would be $4,000, and your actual labor cost was 4150. Actual labor cost was 4150. That means your actual cost is high, and this estimated cost is low. So definitely 4150, if you deduct $150, and that is the adverse variance. Why adverse? Because actual cost was high. Because actual cost was high. So that is why it is the reported adverse variance. It is the reported adverse variance, okay? It is just like the material price variance, and you can call it a labor price variance or the labor rate variance. Yup, 150 adverse. Now, move on to the next question, and the next question is yet again the reverse calculation. It is the reverse calculation, and that's 1750 favorable, 1750 favorable, and it is $1750 favorable. Now, why something is favorable? Because actual cost is low, and we are happy on that. The actual cost is low. That means my estimated cost would be high. Okay. Actual labor cost was $23,000. If it is low, then this means it is an adverse variance. See, your cost is saved and you are happy for the favorable variance. Actual number of hours, 5500. Yes, 5500. This is my actual hours. And if this figure is high, you need to take it that you need to add it up in order to calculate this high figure. So this is 23,000 plus 1750. That means it is giving me the sense 24750. And it does make sense that I estimated 24,000 and in actual it was 23,000. So that means my amount is saved. And simply divide with this figure. Divide with this figure. You will be in a position to calculate the standard rate per hour. So 24750 divided by 5500, it is $4.5. And that's your answer. 4.5. 4.5 per hour. $4.5 per hour is the standard rate. Now let's move on to the next question. It is labor efficiency variance. I should call it efficiency. Labor means that it's a use of labor hours. It's basically the use of labor hours. Okay. So see that the labor standard is 7 hours paid at $6.5, and actual production in the period was 200 units, and labor actually worked. Now you allowed your workforce to take 7 hours to produce 1 unit. Okay, you allowed your workers to take 7 hours to make 1 unit, and when you called to your workforce and they did produce 200 units, so you might be having a figure in your mind that 7 multiplied by 200 is equal to 1400 hours. This is the labor hours that should be for actual units. This is something it is in your mind. This is your estimated. And when you looked at the reported figure, you again shocked. It is 1600. Oh my God. That means 200 hours more. That means it's waste of hours. And obviously, if it is estimated figure is low, this is high, that means this is wastage of hours. The laborers took 200 hours more. And obviously, you have to pay them, and you are measuring everything based on your standard cost. So that means it will be giving me efficiency variance. Efficiency variance 200 multiplied by 6.5, that is dollar 1300 adverse. 1300 adverse. Okay, this is efficiency variance and it's 1300 adverse. This is the labor efficiency variance. Now, we are moving for the next question, and this is the reverse calculation. This is the reverse calculation. Is a reverse calculation, and see that calculate the standard time per unit, and standard time per unit is calculated through efficiency variance. Okay, and here is the format. First of all, I just want you people just to read this case. Do not try to solve it, just read it. Okay, now probably you have read this question and see that we need the efficiency variance, but we do not have. But we have the total variance. No need to worry about it. We have total variance, and we have got rate variance as well. That is 700 favorable. So how do we calculate that? The total variance is a rate plus efficiency. Rate plus efficiency. My total variance is favorable, that means positive, and that also means positive. Okay, so my rate variance is 700 and my total variance is 2575, and the efficiency variance is now unknown to me. Now simply 700 will go over there with a minus sign. 2575 minus 700, that means is equal to 2575 minus 700, that is dollar 1875 positive, that means favorable, and that is my efficiency variance. Okay, 1875 is my efficiency variance, and see that this is a standard rate of pay per hour dollars, that means $3. This is dollar. Okay, so I would have multiplied by $3 and I would have got 1875 favorable. Favorable means that actual hours are low, and I did have multiplied by $3 and I need to simply divide it to go over there, and that means these hours are saved. These hours are saved because of the favorable theme. Okay, and if it is saved, we are happy. We are happy with the favorable results. and the actual hours are 11200. So first of all, 1875 divided by 3, it is 625 actual hours, 11200 actual hours, 11200, and that means actual hours are low. And I did estimate it high. So 625 and 11200, 11825 hours. Okay, we need to calculate the standard time. We need to calculate the standard time, multiply by units, actual number of units 2150. This is actual units. Okay, so 11825 divided by this thing, 2150, we got simply 5.5. So that means 5.5 hours. Now this is my answer. 5.5 hours is the standard time per unit. This is the standard time per unit. Standard time means this is an estimated time. So such kind of dodging questions can be faced in examination, in which you have to go to 2-3 different calculations. You have to take 2-3 different routes in order to go and calculate your required answer. Okay, let's now move on to the next slide. And the next question is about the idle time variance. It's about the idle time variance. But before calculating this idle time variance, I need to explain what is idle time actually is. See that what is actually mean by the term idle time. Idle time is something in which labor is doing nothing but is still being paid. Imagine that the workforce is here in the factory, the workers are here in the factory, and they are doing the work, and suddenly the machine there was a bottleneck, or you can say that there was a disturbance in a machinery, and the machine got hanged for let's say 1.5 hours. But the workforce is here, they are spending their time and they're doing nothing because it's not their fault. Idle time is not always the fault of the labor. Idle time is not the fault of the labor. It quite may be possible that materials are short. It quite may be possible that there is electricity breakdown, there is a technical breakdown, the machine breakdown, and the production is not possible. So the workers are here in idle time mode. What is idle time? Idle time means employee doing nothing. Employee doing nothing. Employees doing nothing, but still being paid. but still being paid, because it's not always the fault of employees. The fault of employees. Okay, you can note down the examples of the idle time. That is due to electricity breakdown, that is machine breakdown, that is electricity breakdown, or you can say the shortage of the material, any factor which are beyond the control, of the employees, and that is the idle time variance reasons. Now, example, and remember one thing, that idle time variance is not always adverse. It quite may be possible that idle time variance would be favorable as well, but how to calculate it, we need to study this requirement. See that actual time paid for, actual time paid for, and actual time actively worked. You paid them for 1000 hours and they did work 880. So that means 1000 minus 880, that means 120 hours are idle for them. 120 hours are idle. Okay. Now, we need to read the question. The company had estimated the standard rate to be paid to the workers 15 per unit. See, this is 15 per unit, and it needs to make 1 unit, it needs 3 hours. To make 1 unit, it needs 3 hours. That is what would be the rate of the labor. That is the rate per hour. That means rate 15, and there are 3 hours to make 1 unit. So that means $5 per hour. This is my standard rate. Okay, this is my standard rate per hour, because usually the rate of the laborers are being measured in the form of the hours in which they are paying for. And one thing is very interesting here, the company had already estimated 15 hours idle. See, this is a very interesting statement, that company had already estimated 15 hours as idle time. So that means your estimated idle estimated idle time your estimated idle time is 1/5, that is 15 hours, and actually the idle time is 120 hours. So the entire 120 is not adverse, because we were mentally prepared that 15 hours would go waste. We had already considered 15 hours would be wasted as an idle, and it was 120. So that means the entire 120 is not the adverse. 105 hours would be adverse. This is my excess idle time. Excess idle time. Okay. If my actual idle time would be less than 15 hours, the difference would be favorable. So this is 105. And how to calculate the idle time variance? 105 hours multiply by standard rate, that is $5. 105 multiplied by $5, and that is $525 adverse. This is 125, because 105 is the excess idle time. This is the excess idle time. Excess idle time. So that's something adverse for me, because we have estimated that 15 hours would be wasted as an idle, but in actual it was more than 15 hours. Remember one thing, if your I think I should write it. I think I should write it for your relevance. I'm writing with the black color. Just focus here. Note. If actual idle time would be less than 15 hours, then difference would be favorable. Then the difference would be favorable. So it does not mean that idle time variance is always adverse. No, idle time variance is always adverse. False. Idle time variance can be favorable as well. And I gave you the example. What I'm trying to do in this webinar, that through the question practice, it's my main aim to cover maximum portions of the content of the syllabus. Do you copy this? Okay, so we have successfully covered two variances. One is material and number two is the labor variance. Now I am active in the question box and you should also. Come on, tell me, did you understand this concept of material and the labor variances? Come on, be active, be active. Show your presence in the question box. Everyone, excuse me. I always encourage to participate in the class, and so you can also participate online through question box. All clear? All clear? And one thing I would like to say it again, as I have told you yesterday, don't be panicked, don't get involved in the rumors in about anything else about the examination remotely or at the center base. Don't be panicked, just focus on the studies. Book your exams whenever you feel confident about the exams. Okay? Yes, it's a tricky topic, but you can also um, get the recorded access of this class, Mr. Saad Ahmed, in order to revise the areas again. I also received a few messages yesterday about the examination, so I told them that don't get panic. ACCA is one of the leading qualification in accountancy. You know that it's in more than 180 countries. So it's not a small qualification that you are pursuing. It's a very big qualification and a very reputed organization. They will definitely find out the solution for your exams. And the pandemic condition is a global issue. It's not the issue in a specific country. So don't be panic about the exams. Book the exam. Book the exam when you feel confident. Okay. You can WhatsApp me here. You can WhatsApp me. I will send you the WhatsApp group link, or the group link would be shared in this question box again. Fiona Trish, can I get standard costing in the section B? Yes, Fiona Trish, you might be receiving the question in section B kind of questions. Okay, the group link will be shared again. The group link will be shared again. Don't you worry about it. Razia Mukhtar, Kashmala Khan, the group link had been shared. People can join. If you are not able to join, simply WhatsApp me in this number. See at the bottom of the page. This is my WhatsApp number. Okay, now let's move on to the next variance. And the next variance is variable overheads variances. Now the next variance is about the variable overhead variances. And one thing before going for the variable overhead variances is that what is actually the variable overheads? That is which can change, which is not fixed. It's a variable. And remember one thing that variable overheads are, I think I should write it at the bottom of the page. There are two variances. Remember, expenditure and efficiency. I'm going to explain it later on in the next slide. But see here, if you remember from your studies that you calculate variable overhead absorption rate. Variable overhead absorption rate. Let's say, for example, no, examples will be later on. Variable overheads are, it's not hard and fast rule that you always take the labor hours, but usually variable overheads are charged, I mean absorbed, on the basis of labor hours, on the basis of labor hours. Okay, but this is not always the case. It quite may be possible that organizations are charging the overheads based on the machine hours, but usually we take labor overheads based on the labor hours. And it does make sense. For example, if I am at my office, for example, if I am working for 3 hours, the electricity will be used for 3 hours, and obviously the electricity will charge me cost. If I will be working for 6 hours in an office, the electricity expense will be doubled. If I will be working for 10 days, the electricity expense would be more than 3 times the variable portion of the electricity, and so associated variable overheads, which is based on my labor hours. So it does make sense that variable overheads are being absorbed on the labor hours, but remember that labor hours, that should be active hours of the labor, because variable overheads are being absorbed on the basis of the active labor hours, not on the total hours. It's on the active labor hours. So let's now move on to the next slide in order to calculate this. This is something variable overhead expenditure variance. We do not need the labor rate. We need the variable overhead absorption rate 1.5. OAR stands for overheads absorption rate, and this is 1.5 per hour. What does it mean? $1.5 per hour. $1.5 per hour means, first of all, I would like to make it clear that this is not something actual, this is estimated. 1.5 hour means that when labor will work 1 hour, estimated variable overheads $1.5. Okay, when the labor will work 1 hour, estimated variable overheads is $1.5. This is the interpretation, this is the meaning of this 1.5 per hour. And the company had recorded the following hours. This is the paid time. We do not need this. This is the actual active time, we need this 5800. So if, because overheads are being absorbed on the active labor hours, if there is $1.5 per hour, that is variable overhead absorption rate, and how many hours are actual, that is 5800. This is active time. Sorry, this was the active time, and variable overheads cost should 1.5 multiplied by 5800, that is $8700, and actual amount of variable overheads 8650. 8650 is the actual overheads, 8650. Okay, so 8700 minus 8650, that means I was estimating that variable overheads cost should 8700 and actual overheads is 8650. So that means I saved $50. That means it is favorable because my actual cost is low and this is high. This is variable overhead expenditure variance. Okay, this is the expenditure variance, $50 favorable. This is $50 favorable. This is variable overheads expenditure variance. I'm waiting 15 seconds more for you people to copy. If you people want to copy, go for it. Okay, this was something variable overheads expenditure variance. Okay, variable overheads expenditure variance, which means that what amount of variable overheads cost that should be for, remember, but remember one thing, it should be the active time. It should be the active time, active time after deducting the idle time. And I have taught you the concept of the idle time 2 slides back. Now, this was the variable overhead expenditure variance, that what the cost should be and what actually cost is. Now, we are moving towards the next slide. And I think I should refer the question box, whether any question. Okay, Saad Khan, because I am now addressing this thing, that why we take active time, why not the total? Because the interpretation of this rate is that when labor will work 1 hour, when the labor will work, when the labor will work, and that 200 hours laborers were working nothing, they were actually involved, will work, that is actually referring the active time, because overheads are connected with the productivity. And when labor is doing nothing, that means it is simply the expense. This is not connected with the labor hours. So it is the active time which we have to take. Okay. Now let's move on to the next question. And here it is, variable overheads efficiency variance. This is variable overheads efficiency variance, efficiency. And one thing I would like to write, that efficiency means time of labor. Efficiency means time of labor. It means time of labor. Okay, time of labor, and we will be using variable overhead absorption rate. We will be using variable overhead absorption rate and the time of the labor. Okay, now AH Limited had estimated that to make 1 unit of the product alpha, it needs 8 hours. Okay, labor hours that should be for actual units, that is 8 hours multiplied by, and actually the company had produced 600 units. Okay, fine, 600 units. This is something actual units, and this is something standard time. That means 8 multiplied by 600, that means my time should be 4800 hours. And actually the company produced 600 units in 5000 hours. 5000 hours. 5000 hours. So what does it mean? It means that the company had reported 200 hours, sorry, 200. It is 200 hours wasted. It is simply wasted. Why? Because I estimated low and my cost, my actual time is high, and I have to multiply with the variable overhead absorption rate $XYZ per hour. And where is XYZ? Oh, this is not mentioned. This is not mentioned, but we have got overheads and the activity data. And whenever you see, remember, whenever you see more than one activity levels, whenever you see more than one activity levels, that means what? That means you have to apply, yes, you have to apply high low method. See my trick. I do I do cover the high-low method as well along with this variance calculation, and that was the trick to cover the maximum portion of the syllabus, of the core areas at least. That's the main objective. Okay, so you people know the high-low method technique. High-low method technique, we identify lowest and highest activity, and this is overheads. Overheads are split into fixed and the variable. Now, what is the high-low method? That means we need to calculate variable cost per unit. So simply take the difference of the variable cost of the cost and the units. Variable cost per unit will be the resulting answer, and that is a very basic calculation of high-low method. What I am doing, it's 12,000 minus 9,000 divided by activity. 4,200 minus 3,000. And this is hours. So this is not the variable cost per unit. This is variable cost per hour. Okay. So here we go for the rate. And this is variable overhead absorption rate. Now how to calculate? 12,000 minus 9,000 divided by 4,200 minus 3,000. It's $2.5 per hour. And now this is my variable overhead absorption rate and 2.5. And this is the labor efficiency basically. And the rate will be multiplied by variable overheads. So 200 multiplied by 2.5, that means $500 adverse. This is direct labor time. Direct labor time, yes, because overheads are being charged on the basis of labor time. Overheads are being charged on the basis of labor time. That is why we are calculating labor time and multiply with the variable overheads rate to calculate the efficiency variance of variable overheads. Yes, I am waiting 15 to 20 seconds for you people to copy this. Okay, so this was the variable overheads efficiency variance. I should refer the question box. Okay, there is a question, how to know that we have to multiply variances again with hours or rate to get the final answer. So remember one thing, that the final answer of variance will always be in dollars, will always be in currency, because it is the monetary amount which should be referred to calculate the variances. And this is the variable overhead, so obviously we need variable overhead rate. The variance is always in the monetary answer, in amount, in the currency, in dollars. Is your question addressed? Mohammed Shoaib, yes, that's good. Okay, now there is a fixed overhead variances. The total variance is split into two: expenditure and the volume. Fixed overhead expenditure and the fixed overheads volume variance. And before going to start the fixed overhead variance, remember this thing, that you already aware that overhead absorption rate is budgeted fixed overheads upon budgeted activity. What if this figure is missing? What if this figure is missing? What if this figure is missing? If missing, and this is given, and this is given. So that means budgeted fixed overheads will be calculated how? That means budgeted fixed overheads is equal to fixed overhead absorption rate. That means fixed overhead absorption rate multiplied by budgeted activity. See, this is the budgeted, and you have to multiply with the budgeted activity. You have to multiply with the budgeted activity, okay? So this is the budgeted fixed overheads, fixed overhead absorption rate multiplied by the budgeted activity level. So this is, we need to calculate the rate multiplied by budgeted units or the budgeted activity to calculate the budgeted fixed overheads. Now let's move on to the question, and the question is, calculate the fixed overheads expenditure variance. Calculate the fixed overheads expenditure variance. Fixed overhead expenditure variance is simply the difference budgeted fixed overheads and the actual overheads. Okay, I need to take a rate multiply by FOAR multiply by budgeted units. I got budgeted units 500. Yes, 500. And the rate should also be on per unit. And the rate is given here. Yota Limited had estimated that fixed OAR is 1.95 per hour, per labor hour. And it needs 4 labor hours. So that means 1.95 multiplied by 4. 1.95 multiplied by 4, that is $7.8 per unit. 7.8, and that is on per unit. Okay, 7.8 multiplied by 500, that is $3,900, and that is the budgeted fixed overheads, and the actual fixed overheads is $4,600, and that is $700 is adverse. $700 is adverse, and that is the fixed overhead expenditure variance. Okay, so this is the fixed overhead expenditure variance. That's 700 adverse because the budgeted is 3,900 and the actual fixed overhead is 4,600. And remember to calculate the budgeted fixed overheads. That is the rate multiplied by budgeted units. Okay, now there is a next question, and that is the fixed overhead, the volume variance. Remember that fixed overhead variances are split into two categories. Number one is the fixed overhead expenditure variance. Number two is the fixed overhead volume variance. And now I am going to explain this fixed overhead volume variance. What is fixed overhead volume variance? Volume here means number of units. Number of units. And remember one thing, I'm writing one thing here, that imagine that you have a fixed cost of $5,000 per month. Imagine, just imagine, forget this question, just imagine. You have $5,000 fixed cost per month, and you are producing 200 units, and you are producing 450 units. Which scenario is best in that fixed cost? Case 1 or case 2? Hurry up, answer me. Within the same fixed cost, within the same fixed cost, do you prefer 200 units or 450 units? Hurry up. Yes, Fiona, Trish, on this you take budgeted. Yes, Fiona. Yes, everyone is answering me that within the same fixed cost, 450 units is more preferable. So what does it mean? Obviously 450 units, because the fixed cost is same and my activity should be high. So I'm now going to write the statement that it is favorable to produce more units within the same fixed overheads. Okay, so what is the overheads? 1.75 per hour, and it needs 3 labor hours. So that means 1.75 multiplied by 3 hours. So 1.75 multiplied by 3, that means $5.25 per unit. 5.25 per unit, okay? And you made a budget to produce 8,500, but you did produce 9,000. So how to calculate the fixed overhead volume variance? It's the actual production, 9,000 units. Budgeted production, 8,500 units. So that means I had produced 500 units more than my expectations, than my budget, and 1 unit fixed overhead absorption rate is $5.25. 5.25 per unit. And here we go for the answer. Multiply by 5.25 per unit. That is $2625 favorable, because we had produced more units within the same fixed overheads. We had covered four variances, alhamdulillah: material, labor, and the variable overheads variance and the fixed overheads variances. Okay, students, I hope that you had written this thing. Now, before going to start for the next variance, we are having a very short break of 15 minutes, and then we have to start the sale variance. Now, here is a short break of 15 minutes. According to me, it's almost 12:45, and be there at 1 or 1 5. Short break 15 minutes from now. Okay, your break starts now, and do not disconnect yourself. Stay connected. Come after 15 minutes. Your break starts now. Hello, students. Welcome back from the break. And we are now back from the break. And I would like to confirm my voice and screen is all clear to all of you. Um, okay, that's good. Abasi Friki Umo, uh, your message was missed by me. You need to copy the last slide. I'm giving you few seconds. Just click this picture. Just click this. Take the picture. Is it done? Abasi Friki Umo, is it done? With this slide so that I can proceed. Uh, okay, you're most welcome. Now, okay, now students, now I am going to um, solve the next variance. And the next variance is about the sale variances. And see that in sale variance, we have got two variances. Number one is sales price variance, and number two is the sale volume variance. Okay, sale price means that is dollars selling price. Sale volume means that is number of units. Okay, so let's move on to the selling price variance. This is a question, and see that sale price is the inflow, and more inflow is more favorable. Obviously, more inflow is more favorable. Okay, more favorable is more inflow is more favorable. Star Limited makes a product Sigma, and the total cost is 50 per unit and charges 30% markup to calculate the selling price. What does it mean? It means that the cost is $50 and you add 30%. You add 30%. So 50 plus 30%, and you got the selling price 50 plus 30%. That becomes $65 per unit. 65 per unit selling price. Okay. Actually, the company had sold 7,000 units in a period which was above the budgeted sales of, but actually you have sold 7,000 units. The company had raised the revenue amounted this one. See that according to your estimation, the selling price is $65 per unit, and actually you did sold 7,000 units. So what is your mindset? This is something actual sold, and this is something standard selling price. Now, what do you mean by this thing? 65 multiplied by 7,000. That means my revenue should be. That means my revenue should be 455,000. That is sales revenue that should be for actual units. And sale revenue, sales is my inflow. Inflow. If more, then it is favorable. Obviously, it does make sense. And how much did you actually receive the sale? 453. 453 comma 640. Actual sales revenue is 453 640. What does it mean? I was estimating that I was estimating that I will be receiving this amount, 455,000, but I had received 453 640. So what does it mean? What does it mean? That I have received less inflow, and less inflow will make me adverse. Okay, this is an adverse because I'm not happy with this because I had received less inflow. It's less inflow. Okay, so what is the difference amount? Minus 453640, that is 1360 adverse. That is the sale price variance, and it quite may be possible that we had given the discount and the discount was not estimated in advance. We probably had given the discount and the discount may not have been estimated in advance. So that is basically the sale price variance because I have received amount less than my estimations. I had received the amount which is less than my estimation. So that is why it is said to be the adverse. That is why it is said to be the adverse variance because we have received less amount. Okay, so this is the sale price variance. Okay, now I am moving towards the next question, and the next question is about the sale volume variance. See that if your company is using absorption costing, we will be taking profit. If your company is using marginal costing, then we will be taking contribution. Okay, if company is using the absorption costing, and if company is using the marginal costing. Now I'm going to read the question. Moon Limited had made the budgeted to sell 12,000 units, and we need to calculate the volume variance, and volume variance is basically number of units. I prefer that you people should read this question first. So 12,000 units you have made the budget to sold, and actually you had sold 12,900. That means you have sold more. Okay. So remember one thing, that how to calculate the profit, and how to calculate the contribution. The profit is calculated as selling price minus full cost. There is selling price, standard selling price is 105, and full cost means variable and fixed both. That is 52, sorry, that is 52 minus 5 as well, both 52 and 5. That is the variable cost and the fixed cost. In order to calculate the profit figure, we need to deduct all the cost. So 105 minus 52 minus 5, the resulting figure is $48 per unit. This is the standard profit, and the standard contribution is calculated as selling price minus variable cost only, because this is a very basic thing. The standard cost, selling price minus the variable cost. So the selling price is 105. The selling price is 105, and the variable cost is 52. Variable cost is $52, and the resulting figure is my contribution. 105 minus 52, the resulting figure is 53 per unit. And remember that we are here to calculate the sale volume variance. The company made a budget to sell 12,000 units. but in fact 12,900 units sold. That means actual units sold were more than your budget. Okay, so here is the calculation trick, that actual units minus budgeted units multiply by the respective figures. So see, if I will be using the absorption costing, that means 12,900 minus 12,000. That means we had sold 900 units more, multiply by absorption costing. So we will be taking the profit figure, and the profit is 48. That is $43,200. And since I have sold more units, so that means it's favorable. And we are happy with the favorable results always, okay? Because we have sold more. And in marginal costing, we are taking the contribution figure. So 12,900 minus 12,000 multiplied by contribution, which is $53. Here it is, $53. That is $47,700 favorable again. And we are happy with the favorable results because we have sold more units as compared with our budget. And obviously, if I am selling if I'm selling more units than my budget, that means I am making more profit, I'm making more money. If it will be less than the budget, that means it would be the adverse answer. Okay, students, now we are moving towards the next slide, and the next MCQ is very interesting. Why I am saying this interesting? Because it needs a thorough attention, and it is a pure and exam standard MCQ you could be facing in your exam. And I prefer that if you can try this question first of all, and I'm just giving you 2 minutes for this question to read and think how to solve this question. I'm not even reading the requirement. You should analyze yourself. Try this question. If it will be wrong, then it's a good opportunity to find out your mistakes so that you will be able to recover it. Okay. So solve it, and I will be solving after 2 minutes. Start. And I want the answer in the question box. Don't worry about the right and the wrong answer. Just drop your answer in the question box and see what will happen next. Start solving this, students. All right, students, is there any answer from your side? Is there any answer from your side, students? Okay, let's see that whether your calculated answers are right or wrong. And right now, I'm going to explain this question. And first of all, as usual, I always say to the student, first of all, read the requirement and then read the question accordingly from that mindset. You are required to calculate the sales revenue that should be for 2500 units. When I looked at the word sales revenue, I should remember the sale price variance calculation. Okay, but we do not have the um, but we do not have the selling price here in this question. We don't have the selling price. See, the question is saying that the following information is available for the month of May. Standard cost per unit 12, budgeted sales volume, actual sales volume, and sale volume profit variance. See, when I look at the word profit, that means I recall that this company would be using traditional absorption costing, all right, and this is 450 favorable. And how to calculate the sale volume variance? That is sale volume variance. Sale volume profit variance, that is actual sold minus budgeted units multiply by standard profit, and I got sale volume profit variance. Okay, sale volume profit variance. So I am right now I'm going to write the figures which are given in the question. Actual sold units, actual sale volume is 2300 units. Yes, 2300. The budget was 2150. Okay, the standard profit is unknown to me, but we have 450 favorable. 450 favorable. It's favorable variance because I have sold more units and it's favorable for me. Okay, so through the reverse calculation, I can calculate the standard profit. So 2300 minus 2150, first of all, it's giving me 150 multiplied by standard profit. See, I'm simplifying my calculation, and you should also simplify the concepts. And standard profit is calculated as 450 divided by 150. That is $3 per unit. It's multiplying, and here it will be divided. Okay, standard profit. And my standard cost is $12. Now see that my answer could be like that way. What is the standard cost? So the standard cost is $12. And what is the profit? The profit is $3. So that means $15 per unit. Standard selling price. Okay, 15. And again, you can now calculate the answer. Sales that should be sales should be for 2500 units is 15 multiplied by 2500, and that is now my answer. See, I had calculated through two different routes. You have to take a long route to solve this question because the question is complex. 15 multiplied by 2500, and that's giving me the answer $37,500. And this is not the actual sale. This is something that should be for 2500 units according to my estimations. Hurry up, students, do copy this. Okay, so the variances calculations are okay. Sure. That's good, Fiona Trish. You have calculated this. Okay, sure, Mr. Saad Ahmed. I'm displaying the slide for you. This slide you were asking about. Hurry up, do answer me in the question box, Mr. Saad Ahmed. This was the slide. Okay, that's good. Okay, students, the variances calculations are finished, and we have now operating statement. Now, what is operating statement? Operating statement is basically a reconciliation. There is not a reconciliation in the financial accounting. It is basically, what do you mean by the term reconciliation? When the two figures are showing that when there are two figures, when there are two figures and there is a difference between two figures, there must be the valid reason for the difference. And when you identified the reasons, that means the differences amount are solved. That means it is reconciled. So what do you mean exactly by the term operating statement? So operating statement, it's a report for the management. It's a report for the management which reconciles. What reconcile? Which reconcile budgeted profit and actual profit. Which reconcile budgeted profit and actual profit by showing the variances. By showing the what variances? Because when the management will be receiving the report, and on the basis of that report, they will be able to plan, they will be able to control, and they will be able to take the decision. Planning, controlling, and the decision making. Okay, and that is the main objective of the report. And the management will be planning, controlling, and decision making, and the report for the management which reconciles budgeted profit and the actual profit. Okay, by showing all the variances. And this is the sketch of the this is the format. I advise all of you that must follow the format of the operating statement. Do not do not do not do not go against the format, because you will be confused. You will be confused in the exam. Operating statement, it's under absorption costing. Operating statement is under absorption costing. First of all, there is a budgeted profit for budgeted units, and you will have to adjust sale volume variance first. If the variance is favorable, show it with a positive sign. If the variance is adverse, show it with the negative sign. Budgeted profit and sale volume profit variance, sale volume profit variance. And when you will adjust the sale volume profit variance, the resulting figure would be standard profit on actual sales. Then you have to adjust sale price variance, whatever it is, favorable or adverse. Then the resulting figure will be called this thing. Read this. It is actual sales minus standard full cost of sales. It is standard sale minus standard full cost of sale. And then you have to adjust the cost variances. You have to adjust the cost variances. All the cost variance favorable, all the cost variance adverse, just adjust it, and you will be receiving the actual profit. I'm giving you 15 to 20 seconds window if you want to copy or take the screenshot, whatever. This is the format of operating statement under absorption costing. And in my upcoming slides, I will not be solving the MCQ, I will be solving the case-based OTQ worth 10 marks, and it will be very important from your examining perspective. Okay, So just copy or take the screenshot, whatever you want. Okay. Okay, now students, this was the format of absorption costing. Now this is the format of marginal costing, and I don't want to discuss marginal costing format right now. I'm just giving it a pause for few minutes. Why? Here is a format of the marginal costing. I will be explaining, but I think we should jump to the case-based OTQ first, because the first target is of the operating statement under absorption costing. See, this is case-based OTQ. All right, Zigzag Limited. This is case-based OTQ worth 10 marks in total. This is 1 and 1, 2 marks, and then 2, 4, 5, 6, 7, 8, 9, 10, total 10 marks. Okay, so the first case is for 2 marks, and that is the operating statement under absorption costing. So I need to copy that format of absorption costing, and I will be able to calculate these two missing figures. Okay, I'm reading the case. Just be with me and be alert and focus with your active mind. Zigzag Limited has two divisions, Division A and Division B. Following are the information available related to their divisional variance analysis. Division A operates traditional absorption costing. I have left this space in order to calculate this answer. Division A operates traditional absorption costing, and following are the figures calculated of the variances, and division is in the process of completing the operating statement. These are the figures, and we need to calculate the budgeted profit of the division and the actual profit of the division. See, I am now writing the things of the format, and if I can show you the format once again, here it is. Here it is the format of the absorption costing. I am well assuming that you people have copied or at least taken the screenshot of this, because we have to finish this question within a remaining time span. Okay, so this is the format. I'm giving you 10 seconds more to note this format. I prefer take the screenshot. Okay, now students, I am solving this question, and I have left the space in order to calculate the answer. See, this is the operating statement under absorption. This is operating statement under absorption costing. Okay, and how it was started, that was, I'm just writing the format. Okay, I'm just writing the format, and that I will be filling out the figures, and I will be able to calculate the missing figures. First of all, the format begins with the budgeted profit for budgeted units. I don't know the figure, and this is the figure. Okay, missing figure. Then I have to adjust sales volume profit variance. Sales volume profit variance. Whatever the resulting figure will be, it is called as is equal to standard profit on actual sales. Standard profit on actual sales. Then I have to adjust sales price variance. Whatever the answer would be, it will be called as actual sales less standard full COGS. And what's next? All favorable cost variance and all, sorry, adverse variance and all adverse cost variance. Then the resulting figure will be actual profit. Okay, so this would be my answer. Now I'm not going to find out the figures from the case. What's written here? See that it is written that extended profit on actual sale. Extended profit on actual sale. Yes, this figure is given. I am now going to write those figures which are given in the question. 89,600 is the standard profit on actual sale. Yes, 89,600. This was given, and that's the sale price variance. It will be adjusted after it. 8800 favorable, 8800 plus, that means favorable, and it was also given. And the next, sale volume profit variance 5080 adverse. Yes, focus on this thing. 5080, it is adverse, that is minus. Sale volume profit variance, it is also given. I am just placing the figures in this showcase. Sale volume profit variance, okay, and I can calculate this budgeted profit. This budgeted profit, how? See that 5080 was deducted in order to calculate this thing, so we need to add it back in order to calculate this figure. So 89,600 plus 5080, the answer I'm going to write with the black color, that is $94,680. 94,680 is my budgeted profit. Okay, and it does make sense that after deducting this you will be calculating this figure. Now that's good. Some cost variances 15,800 favorable. Okay, we need to calculate this answer as well. 89,600, wait, 89,600, 8,800 plus, that is 98,400, and some cost variance 15,800 favorable given, and minus 9900, that is adverse, it is also given. Okay, so you can calculate this actual profit, and it is your next answer. 15,800 plus minus 9900, that is 104,300, and this is 104,300 is my calculated answer. Okay, this is my final answer, and I've got 2 marks by following the format of the operating statement under absorption costing. Okay, now next requirement is about the theoretical assessment worth 2 marks. Assuming that division had reported $2,500 adverse usage variance. See what is written? Adverse usage variance of materials. If the usage variance is adverse, that means material used were more. Which of the following might be the possible reasons for that? Number 1, the production department had changed the process. Yes, this quite may be the reason, because if you can change the process, the material may be wasted. It quite may be possible. Number two, the labor in the production department were of high skills and experience. No. Why? Because if the labor will be skilled, he will save the material, not waste, and wastage would result in the adverse usage variance. Number three, the material used the material used in the production process was of low quality as compared with the standard. Yes, because low quality material would result in material waste. Number four, number of units, I mean finished goods, were rejected due to poor quality produce. Yes, if the units were rejected, imagine if units will be rejected, then we need to produce more. Then we need to produce more units, and more units will need more material. So that means adverse. And yes, this is also the reason. So I have marked all those reasons which may be the possible cause, which may be the possible reason for the adverse usage variance in the division. Okay. If the labor is of high skills, he would have saved the material, not waste. And wastage would result in the adverse usage variance. Now students, the time come to break the suspense of the operating statement under marginal costing. And this is the operating statement under marginal costing. See that operating statement under marginal costing, there are some changes. Changes in the operating statement under marginal costing. First change, use contribution figure, not profits. Okay. Number two, there will be no fixed overhead volume variance. There will be no fixed overhead volume variance. Why? Because fixed cost is not considered to be relevant for the volume units. You produce 1 unit or 1,000 units, the fixed cost would remain same. Remember that no fixed overhead volume variance, volume, specifically only volume. But there will be, remember this thing, there will be fixed overhead expenditure variance, but it will be adjusted with the budgeted fixed overheads. How? I'm now going to solve this. See that it's starting with the budgeted contribution. There is sale volume contribution variance. The sale price variance is same, and this is contribution, all cost variance, all favorable. And when you will be deducting only the variable cost, that is favorable and adverse, this figure is the actual contribution. And you have to deduct always budgeted fixed overheads, my adjusted fixed overhead expenditure variance will be adjusted, and there is an actual profit. Okay, so note this format as well of the marginal costing. I am waiting approximately half a minute for you people to either take the screenshot or copy or whatever, but do it fast. This is the marginal costing operating statement format. Okay, students, now I am going to solve that case-based OTQ. And I do expect that you had noted down the format. And here is Part C, 1 mark, 1 mark, and 1 mark. There are 3 marks for this thing. And what's here? And what's the requirement? Division B operates marginal costing system. Okay. Division B is operating the marginal costing system and calculated the variances given below. These are the variances figures. And I need to first, I've left the space in order to calculate this. Okay. So this is operating statement under marginal costing. It will start from budgeted contribution for budgeted units. And I don't know this answer. This is my answer. First answer, budgeted contribution. And then we will be adjusting sales volume contribution variance. Whatever the answer is. Then the resulting figure will be called as standard contribution on actual sales. This would be my answer, standard contribution. And then there will be sales price variance. And then there will be sale price variance, okay? And the resulting figure will be called as actual sales less standard variable cost. First of all, let's solve up till now here. What's the figure that is given? Standard contribution on actual sale 90,900. Standard contribution on actual sales 90,900. This is given. Okay. Then what's next? Standard sale volume contribution variance. Contribution variance 1200 favorable. Okay, fine. 1200 favorable. Sale volume contribution variance favorable. Given, that is plus. And in order to calculate it, I have to deduct this two figure because it is favorable. So the above figure, which is my first answer as well, would be less because it is after adding this. So 90,900 we have to go back minus 1200. That is 89,700. Okay, and it does make sense that after adding it up, it will be 90,000. So this is my budgeted contribution. My first answer 89,700, and I got 1 mark. Sorry. Now the next sale price variance is 3,500 adverse. The next sale price variance is 3,500 adverse. Sale price variance is 3,500 adverse, and it is given. So we have to minus it. So actual sales less standard variable cost, because we are using the marginal costing, 90,900 minus 3,500. That is 87,400. Okay. Now after that, I will have to take only variable cost variances. Only variable cost variances. Okay. So some variable cost variance, 9,800 favorable and 1,850 adverse. Favorable variable cost variance, adverse variable cost variance. Okay. What's the answer? 9,800, 1,850. 9,800 and 1,850. Now the resulting figure is called actual contribution. Actual contribution. and that is 95,350. 95,350. This is actual contribution, okay? And this is my next answer. Actual contribution. Now I have to deduct less, always less, budgeted fixed overheads. Budgeted fixed overheads. And what is the budgeted fixed overheads? That is 11,500. Budgeted fixed overheads is 11,500 minus, and then we have to adjust fixed overheads expenditure variance. Yes, in this operating statement, we take fixed overhead expenditure, but no fixed overhead volume variance. See what I'm doing now? I'm just cutting it down. We do not have to take this. But fixed overhead expenditure variance is adverse. If it would be favorable, I would have added that. But since it is adverse, so 2200, so 2200 would be deducted because it is adverse and it is given as well. So the resulting figure is my next answer, that is actual profit. I have marked the star with black color to show that this is my calculated answer. Okay, now 95,350 minus 11,500 and minus 2,200, that is 81,650. 81,650. This is now my actual profit. This is actual contribution and this is budgeted profit. Okay. So I'm now going to write my answer above. That is 95,350 and sorry, 81,650. This is my final answer, and I'm just giving you 20 seconds, 30 seconds to capture the picture if you people want, because we are left with just 5 minutes, and I have to discuss three statements of theoretical question. Giving you just few seconds if you want to take the screenshot of this. See what I'm trying my level best to cover the maximum portion along with the questions, so that you will be able to learn more, revise more, and this is the main aim of practice to pass the paper. Okay, students, now I am going towards the last part D. The following statement had been made related to the standard costing and variances. You are required to make the statements correct or wrong. Number one of the purpose of standard costing is to value the inventories. Yes, because inventories are valued at standard cost, and you should revise the previous variances that we had multiplied everything with the standard cost. So yes, it's the main purpose of standard costing. Number two, adverse labor efficiency variance is a result of poor quality of materials. Yes, it's also right. Why? no matter, for example, that I'm a very skilled person, but what if the material is of poor quality? The material may be wasted in the machine, and it will take me more time to deal with the poor material. No matter I am expert. Okay, for example, you are an expert driver and you are having a car which is very poor. You cannot drive it too fast because there's a problem in the car and you will be taking more time, and so yes, it's a adverse variance. Number three, the general reason means it's not specific. Variance includes the standard costs were set wrong. Yes, all the three statements are right. if standard set if standard was wrong, for example, if the standard was wrong, naturally the variances would result in. And yes, all the three statements are right. Okay, my students. And one thing I would like to say it again, that avoid the panic situation in your surrounding and focus on your studies. Book the exams whenever you feel comfortable and when you are fully prepared. Okay, students. As usual, I will not exit this webinar before until and unless I will receive the feedback. Just drop your feedback. Was this session helpful and have you learned something? Just give me your response in the question box. Everyone. That's good. That's good. Okay, students. So lots of things cleared up. That's very good. And I wish you people good luck and see you tomorrow. Tomorrow, our agenda is the performance measurement, which is yet again the very a significant portion of your exam. Okay, so that's very good. Okay, bye bye. Take care of yourself.